Right. All right. Welcome everyone to the official day 5 of our bootcamp training. On today's episode, we'll focus more on a particular technical method, which is smart money concepts. Yesterday, we talked about technical analysis in general. So we're talking about a particular technical method. This is not the only technical method out there. This is just a particular method, which is known as smart money concepts. These are a group of concepts that talks about means of trying to predict the footprints of the institutions. Okay, so we're talking about smart money concept today, and we're going to be looking into liquidity and smart money, market structure view. The average market structure everybody knows is higher high, lower low, higher high, lower low. But within the context of smart money, we understand them as internal structures and external structure. So today we have a guest with us, PowerFx from the trading community, which I believe everyone is very familiar with. He's very, very good at this craft on my Telegram channel. You can see it on his own channel as well. And he has also been into the smart money system for a little while now. So he's a very good chart analyst. So he's going to be giving us insights into the context of liquidity and market structure, while I give us an overview into how smart money method even made it into the technical analysis space before it was considered a very, very effective or influential system to trade with. So smart money concept was not the original technical method everybody was using when trading started, in the digital space. But along the way, it became very fluent and very influential. Basically, currently the most popular method in technical analysis. So while we look into that, for those of us who might just be joining in, I would go through the ebook which I sent to you guys on Telegram. Within the community, I sent it. Within the waiting room, I sent it, and I think it's also on the chat box now. Yes, yes, it's also on the chat box. So the ebook, or let's say the PDF file, is giving an insight into a little origin of smart money concepts. That is before the Wyckoff schematics and all of that. On the context of smart money, okay, now the screen is displayed. We have the screen. Nice one, bro. Today's topic would be smart money concepts. Yesterday we talked about technical analysis in general. I told you guys how come we have different technical methods like Elliott wave, Wyckoff, all of that. And then we had the guest Pro Trade here who gave us a lot of insight into what you should use technical analysis for, how you should look at technical analysis, and the benefits of it from a very wide range perspective of not just looking at just one method. So we handled that yesterday. Before that, we looked into stock trading. We looked into the origin of Forex trading, the Forex space, Forex industry, history of Forex. And then we'd also look into psychology with King Solomon and all of that. So that has been happening for the past 4 days. Currently, we are in day 5, and we'll be discussing about a particular technical method. So yesterday was on a general. So we are looking at a particular technical method today known as smart money concept. Okay, so this is a single technical method outside the numerous methods you can use. We're just saying on this particular one and on this particular bootcamp, we are teaching you how to make use of this particular method. Okay, so to help you look for that same edge we talked about on the previous episode. So let's get into it. On the first page, we talk about technical analysis, and looking at the history and a little brief insights into technical analysis in general and smart money concept, I gave some insights into the evolution of SMC. And also I told you guys about ICT and the origin of most of these concepts we have in smart money. So if you look into the ebook, like I sent it earlier, you would have, gotten insight into who the ICT is. All right. So he's one of the first guys to originally teach this stuff online. And also let's say his brand or his own platform, he labeled it the ICT trader. So he gave the authentic raw system of trading SMC. And then his own model, let's say his own edge was based on timing and sections. And that's to say he's into the stock market. He mostly trades NAS 100 and US 30. So you can understand why he's focused on timing since he's in the US. But you know, so you use your own experience to craft your own edge. Everybody is using their edge, but that doesn't mean nobody knows other contexts of information within trading. We are all educated and well informed. That's why we can, basically understand market structure and predict the next move. So while you're learning this, is for you to be informed and educated into what is going to happen next before they happen. So that is basically the issue of smart money in the modern days, because it's one of the guys that are considered the fathers of SMC. And then in context of the concepts and the models within SMC that are considered smart money concepts, we have the fair value gap and the order block, the change of character, the break of structure, supply and demand. All of those concepts and models that are used within SMC. Those are models that are used to craft out edge. They help you find your own system and they, help you find your method of trading. And then we also have the symbolic representations of these stuffs, like, when you look at the chart, like what PowerFx is going to be showing us today, it's not going to be terms or theories that are going to be broken down for you. It's going to be practical applications of this concept. So we gave illustrative breakdown on the PDF file, where I stated about market structure in forms of staircase, like if you can visualize a staircase, higher high, lower low, higher high. So the concepts within SMC are symbolic, like I told you guys in previous episodes. And these concepts are things that you should understand in terms of meaning as much as you understand them in terms of application and practical. Because liquidity itself, what is liquidity? In economics, we know that liquidity is the necessity of, a market in the first place. If there's going to be a market, liquidity has to be there. So if we're talking in terms of the currency market and as pairs and trading them in the forex market, you have to understand that liquidity is still the same thing as liquidity. It's just in a practical application on the chart. Okay, the concept of an order block goes into the term itself. An order block is just telling you about an order that was placed in term, like a huge block that was dropped on the market, and the market reacted to this stuff and it created this particular imbalance at this wave. So that zone could be a supply or demand zone, but it's considered an order block in terms of what the ICT taught in his context of mentorship. So other than that, we also have break of structure, which is structure shifting from bearish to bullish. So structure can either move in two directions, bullish or bearish, or is consolidating. So consolidating is that it's within a range. I'm doing this breakdown for those of you who are completely new to this. So you can have insights to what we call these things when you see them on the charts, when the guests will be displaying them. So we have the fair value gap, which is basically an imbalance happening between price action. So a candlestick to the next candlestick. When there's high volatility, there's a gap. So this gap is considered as an imbalance. This imbalance is later filled in the market, and traders look for entries to ride the wave when those imbalances are being filled, or we use them to verify supply and demand zones. The guests will be showing you that on the chart, and that is that. If you go below, you're going to see more insights I gave you guys about smart money concepts in general. And smart money concept basically is just terms and understanding, so you can play smart with market structure. Okay, so if you go more, you find premium and discount, mitigation block, reaccumulation, sell side liquidity, internal structure, external structure, which is what we're going to be looking into today. And then I believe there are more context within the ebook, and this is also made public on my Telegram channel. So if you're also watching from the recording, you can also have the ebook on the Telegram, all of that. And I think this would be the basic breakdown in terms of insight. It's also on the chat box. If you're new, you can be going through it while the guest is on the chat, so you can understand what he's trying to explain. So he's not going to be giving you basic level like I'm giving you right now. I'm doing this so that when we are on the chat, you're not confused, okay? So we can, officially go to the chart. I believe everybody can go to the ebook themselves and have insights to other things that is within the file. So PowerFX, are you good enough to go for this section today's section?
Yeah, I'm good. Yeah.
All right, so over to you then.
All right. Good evening, everybody. I'm sorry I'm using a different identity to like host this section. I'm sorry about that, but I'm still the PowerFX, you guys know. Today we're supposed to be talking about smart money concepts. And it would be very, very rude for me to dive into like how smart money concept works, how personally I use smart money concept and supply and demand principles to like take my trades and everything. It's going to be like very, very unhealthy and very, very rude of me to like dive into
Yes,
the
yes. Sorry about that. Please do properly introduce yourself also, tell us about your platform, a little bit about your background too, because we would like to know a little bit about you too. Because as you can see, you're logged in from ProTrade account, so your identity is looking like ProTrade, you understand? And ProTrade is also an SMC trader, so let's not get things mixed up. So you can give us a little insight into yourself and your platform, your work in general, and so everybody can know a little bit about PowerFX too. But ProTrade is different from PowerFX. Okay, PowerFX is a different person. So over to you, bro.
Okay, as I was saying, I said it's going to be very, very rude of me to like go straight into details with how I trade, the concept in which I trade, smart money concepts alongside supply and demand, using those liquidity sweep, fair value gap, OB and everything. It's going to be very, very rude of me to actually jump into all of those things without formally introducing myself. Um, like you guys know, just like you guys have been seeing in the JayForexHouse community, you guys see how I trade. You guys observed. The way I trade is simply supply and demand. I trade the supply and demand principle, the supply and demand concept, and I've been trading the supply and demand concept for over 2 years. So I've been consistently trading supply and demand for a very long period of time. Supply and demand started giving me a very good win rate, and it made me profitable in the Forex market. So I just, like every normal human being should do, stick to what works for you. You don't necessarily have to, you don't necessarily have to jump from one strategy to another. Once you find your holy grail, which is not so holy, but it's making you a lot of money in the Forex market, you just need to like stick to it and milk that thing to like the brain. So I've been trading supply and demand for over 2 years, and in Forex in general, I've been trading Forex for let's say I'm going to like 5 years. Four and a half, let's say 4.5. 4.5 going to 5 years. I've been trading Forex, and I started becoming so profitable last 2 years. 2 years ago, when I stumbled on supply and demand. So this is why I always preach, whenever you find a system that works for you, you just need to stick to that particular system. It doesn't matter how choppy the market is, how choppy everything is, so long you have discovered that particular system and you see that that particular system is working for you, all you just need to do, you just need to stay locked into that particular system. If it's not giving you what you want, like the old charts, you guys see all of those chart beautification where people try to like beautify their charts using different diagrams, different terminologies, fair value gap like FVG, CH, all of those things. So I'm not going to lie to you guys. I'm going to be very, very real with you guys, just the way I tell my mentees and everything. Are all of those things are not sustainable. If you try to like put all of those things in your head, try to like abbreviate some certain words, try to make your child more beautiful, you're not really trading. All you just need to do, you just need to know what works for you. Settle down and start milking that particular thing, regardless of how choppy your child looks like. It's going to be the realistic thing in Forex is the people that makes the most money the people that makes the most money are the people that have the most ugliest chart. If you can write it down, if you can write it down, or if this is actually like the only information you get from this particular section, get it. The most people that makes money in the Forex market are the people with the most ugliest charts. So don't fall for any form of like scam or whatever it is when it comes to like chart analysis, when people are making their chart so beautiful and not even themselves or their trading account. What you just need to do, you just need to like look for your edge. So long your edge is printing your money. If it's like the smart money concept, supply and demand, break of structure, support and resistance, so long it's printing you a lot of money, you just need to like stick to it. I'm never going to like stick to it. At the end of the day, it all boils down to you knowing how to manage your risk and also refining. Because as time goes by, you'd always want to refine your strategy because everything doesn't come perfectly formed. Like we all know, they didn't just like give it to you into this world and you just started working like that. It doesn't come perfectly formed. As time goes on, you refine, you make things better, you make things better, you make things better, and everything begins to make sense at the end of the day. So you just need to like know what works for you, stick to that particular thing and milk that thing to like the brim. I'm not even going to lie to you. Milk that strategy until it stops working. I'm not even going to lie to you. So stop jumping from strategy to strategy. So smart money concept, let me go back. Smart money concept has been the most profitable strategy I've been trading. And I stuck to it while seeing profitability in Forex 2 years ago. So I have quite an insight or quite a knowledge on trading smart money, supply and demand, because I've been doing it for like not even the longest, but I would say for the longest because it's been giving me a lot of opportunities and a lot in the market. So to formally introduce myself, my name is Precious. For those of you that are not familiar with me, for those of you that don't know me, my name is Precious. Trading the Forex market for 4 years and a half. Um, I trade the supply and demand concepts. You guys, most of you are in my Telegram community already. You guys see what we do. I stick to, I always stick to supply and demand. I don't trade any other thing else. And if you don't want to like get to know more about my identity and everything, you just need to like jump in on my community. You'll see all of those things. So I feel like that's like the introduction you guys need just to my background. Okay. I'd say I study computer science. I got into trading 2019. I started knowing about trading 2019. So I've been an OG for a while. I've been an OG for a while. I started on trading 2019, so I've been losing money since 2019. I'm not even going to lie to you guys. I've been losing a lot of money since 2019, 2020, 2021, 2022. I've been losing a lot of money, but during these years where I've been losing a lot of money, I tried to like make things work because I had to like do a lot. I'm not even going to lie to you. I was in school back then. I had to like sacrifice my school. I'm not a dropout. I'm not saying I dropped out, but I never went to class. I'm sorry I'm bringing this to like this section, but I never went to class. I'm one of those guys. I'm one of those guys you people know that does not go to class but make things work for the academics. So I never went to class. I'm a graduate, of course, obviously, done my NYSC and everything. So that was what trading has literally done. Trading open my eyes to like more possibilities, more opportunities, and also in the nearest future, we're looking to like do bigger things in trading. So jumping into the chart, I think I should officially jump into the chart. This is what I'm going to do. Personally, I know you guys have quite an insight on trading supply and demand, all of those breakup structures and everything. But the purpose of this section is to show you guys my own approach. I feel like that's why all the guests are here to show you guys their experience, tell you guys from their own experience how they do things, how they are being able to like trade the market a certain kind of way for you guys to see that, okay, they are profitable, or this is happening, that is happening, how do you understand the market. So I'm not going to solely show you guys smart money concepts and everything from the main understanding you guys know. Smart money, breaker block, order block. I'm not going to do that. I'm going to just show you guys how I do things personally. Let's just say I'm giving like a one-on-one mentorship to like my mentees. So I'm going to just show you guys how I do things in the market. Whenever I come into the market, what I look out for, how I look out for things, how I'm being able to like analyze the market, the time frames, all of those things. Order block, how I'm being able to like spot order block, spot breaker, sweep of liquidity, stop ons, and all of those things. So let me jump into the chart. I'm not going to do any more explanation verbally. Let me jump into the chart to like start officially. I'm coming. Give me a sec. Okay. So this is the chart. Let me hide this. Let me see if I can hide this. Please, I don't know if you guys can hear me before I proceed. Please, I don't know if you guys can hear me.
You're all
Can hear
good,
you.
bro. You're all good.
Jumping into the charts officially. So the first thing I want you guys to know, whenever I come into the chart, the first thing I always do whenever I come into the chart, I look out for the trend of the market from the 2 hour time frame perspective. From the 2 hour time frame perspective, the first thing I always do, come into the chart, look out for the trend of the market from like the 2 hour time frame perspective. And before I jump into making I make analysis, the reason for stop ons, how I identify stop ons, order block to take my trade off of and everything. Let me just give you guys one important thing in trading smart money concepts, supply and demand or anything. This is one key information you guys need to know. Um, when trading smart money concepts, you need to understand that the trend is very important, and also supply and demand is like the most important thing in trading smart money concepts. Supply and demand is the most important thing in trading smart money concept. Trading supply and demand to like trade smart money concepts. Supply and demand is like the bedrock of trading smart money concepts. I want to like show you guys the 4 types of supply and demand. So take this as a lesson. If you don't know it already, if you don't know it in this section, you're going to know it. We have 4 types of supply and demand. We have the rally-based rally. 4 types of supply and demand we have in the markets. Major supply and demand we have in the markets. Major types. We have the rally-based rally. We have the drop-based drop. We have the drop-based drop. We have the rally-based drop. We have the rally-based drop, and we also have the drop-based rally. We have the drop-based. We have the drop-based rally. So these are like the 4 types of supply and demand we have in the market. The 4 most effective supply and demand we have in the market. And all of these supply and demand we have in the market are applicable to like the trend of the market. This is why you always need to like know the trend, what the trend of the market is going to. Remember the first thing I told you guys, whenever I come into the charts, I always look out for the trend from like the 2 hour time frame perspective. Obviously, whenever the market is trending all the way to the upside, it's making series of like high highs and high lows. And whenever the market is trending all the way to the upside, which is the market is going all the way to the upside, uptrend, trading the market all the way to the upside, you want to like look for demand zones because you want to be buying. Trending up, you want to like be looking out for demand zones. Whenever the market is coming all the way to the downside, you want to be looking out for supply zones to sell from supply zones. So let's say give or take the market is trending all the way to the market is trending all the way to the upside. The market is trending all the way to the upside, making series of lows, highs, lows, and highs. All these pulls in the market are what we call our base. Like I said, rally, base, rally. All of this, the market rallied all the way to the upside. It retraced all the way to the downside, created a base. Now this is called our base, which is the base you have here. And all of these things, some people call them impulse, correction, and another impulse all the way to the upside. Some people call this the zone, the major zone where market reacts from, but I call them our base, my base. Because whenever market is doing rally base rally, which is uptrend, higher highs, higher lows, and higher highs, the higher lows are my base. I'd want to identify them to be my base. So whenever I'm trading supply and demand, I always see this to be my base. And whenever price comes to a certain base, the ideology on base, whenever price comes to a certain base, would always want to be looking out for buys. That's why I said it is tallied to like trading the market all the way to like the direction it is going to. So whenever price returns back to our base, we'll always mark our base. Whenever price returns back to our base, we're looking like to buy or to sell, regardless of the situation of the market. We always want to be looking out for buys or sells, and you should be correct with like the direction the market is going to. If the direction of the market is in an uptrend, you'd always want to look out for buys. If the market is in a downtrend, you would always want to look out for sales from a certain base. You don't just buy or sell from every base. So let's say you're trading supply and demand. Whenever the market comes back to a certain base which it has rejected from, we're going to buy from that particular base. So imagine market coming down to like this particular area. What does the market do when it gets here? It rejects all the way to the upside. This for rally base rally. Drop base draw. The market is literally coming all the way to the downside. So the closest base, which is like the closest supply zone that caused the previous break of structure, we want to mark it out. So price goes all the way to the upside, mitigates, and comes all the way to the downside. This is for supply zone, identifying supply zone. Why this? If you don't know what this is like trading the market to like the opposite direction. Simply means you are doing counter trend kind of trading. It simply means you're doing a counter trend. You're trying to trade the market to like the opposite direction after giving you like your shift of structure, change of character, and all of those things. This is where this is where the smart money comes in. This is where your knowledge on smart money doesn't come in when you're making analysis. Smart money comes in when you are trying to take your trade. Those confluence like the fair value gap, the order block, the sweep of liquidity, the inducement, those are um where smart money comes in. Smart money comes in when you are trying to like take your trade. So after seeing this massive push all the way to the upside, what does smart money tell you? Smart money tells you that this particular order block is valid. What makes another block valid? The upside causing a break of structure. The last bear push all the way to like the upside or the downside, causing multiple break of structures. You know that this particular order block is valid. Then seeing this particular push all the way to like this direction, all the way to the upside, you understand that if market pushed like this to a certain area, creating all of this break of internal structure, you would observe there should be a certain form of fair value gap there. If it's like a long candlestick, there should be a certain form of like fair value gap there. So fair value gap, smart money concept comes in when you are trying to take a trade. That's when you like put smart money concept into perspective. Okay, do you know how to make analysis? Now you've made your analysis. What's next for you to do? What's next for you to do is put all of those things you know about smart money concept, the sweep of liquidity, the clear break of structure, all of these things, you now put them into perspective. So before, this is why I literally had to like break it down. I literally have to like break it down for you to understand what supply and demand is before we jump into the details like smart money concept, all of those liquidity, fair value gap, and everything. So these are the four types. If you don't know them, Now you are getting to know them. These are the 4 types of supply and demand we have in the Forex market. And I don't know, as time goes on, I would want to like give a pause just in case anybody have any questions to like ask, then we'll now move on with the section. But I don't know if I should like delete all of these things, or if you can screenshot, you can screenshot. If you don't have them already, or if you don't know them, you can screenshot. But I don't know if I'm permitted to like delete these things. I don't know if I'm permitted to like delete.
Is everyone good? Can we clear the screen? Can somebody just indicate so we know that we can clear the screen? I see Joe is in the building. Yo, Joe, from your end, are you good? Can we clear the screen?
Yeah, sure. Good evening.
Good evening, brother. How you doing?
I'm fine. And you too?
We are good. We are good. Welcome. All right,
All right,
so
Thank you.
let's proceed then.
let me go to another chat. So after having that knowledge on supply and demand, now we can further move into making good analysis using this smart money concept. Like you guys know, liquidities. Liquidities are, I'm going to explain liquidity in a layman term. I'm not going to say too much, but liquidities are money. Liquidities are money that is just hanging around the Forex market. And how do you know how do you know all of these things? How do you know what liquidity is? You see those layman term, you see those candlestick wick projection, this one, something like this, candlestick wick projection, something like this particular thing you're seeing here. Let me make it a little bolder. This particular candlestick wick projection you're seeing here, this is actually liquidity. This particular candlestick wick projection you're seeing here, this is actually liquidity. This particular candlestick called liquidity. This is actually called liquidity. This particular candlestick wick projection you're seeing here, this one at the bottom, it is called liquidity. So liquidities in the Forex market, in a layman understanding or in the layman term, liquidities in the Forex market are money just hanging around a certain area, waiting for price to come and fill it. It's just like you going to it's just like you going to the supermarket. You go into the supermarket, you got 1 or 2 things from there, and you are waiting for your change. Let's say the cashier tells you that your change is not available. She's coming, let her go and meet another person to like maybe sort for the come in, let me do this. The market cannot just print leave it hanging like that. First doesn't work like that. Every money in the Forex market down to 0.0, it is going to be cleared. Every money in the Forex market is going to be cleared. That's why you see that whenever the market gets to a particular area where you like mark out liquidity or mark out inducement, you would observe that the market is likely going to take out that particular inducement before going all the way to its anticipated direction. I bet you, if you don't want to test it, if you don't want to try it, let's just give it a test. I'm talking about liquidity now. So let's say this particular area is a liquidity area. I'm coming. This is me explaining it from the live chart perspective. Let's say this particular area is an area of liquidity, and obviously the market is ranging all the way to the downside. So what did the market do? When the market made lower low, lower high, lower low, lower high, lower low, the market ranged all the way. It rallied all the way to the upside. It cleared this particular liquidity. You can see the market pushed all the way to the upside, making sure that this particular liquidity is being cleared. The candlestick superseded all of this particular inducement here. Market cleared it and started coming all the way to the downside. That's telling you that it is not possible for Forex to just leave money hanging around in the air. It is obviously going to be cleared. Same thing is going to happen for this particular one. If we want to go to if we want to go to like other charts, same thing is still going to like happen on other charts. So the market is going to likely come all the way to a certain area of liquidity and clear it. And liquidity are actually money. So you can't just expect me to print a certain amount of money and just leave it hanging around thin air like that. It doesn't work. That's how the market works. It doesn't work. The market will definitely rally all the way to like that particular liquidity area, clear the liquidity, sweep the liquidity before going to its anticipated direction. That is for liquidity. When we say stop on, stop on are actually engineered based liquidity made by the market makers to either take out the sellers or take out the buyers. And when we are talking about stop ons, we want to see something like this. I feel I should just clear this now. This is BTC USD. When we're talking about stop ons, we're saying something like this. Remember, like I said, stop ons are real-time like manipulation where market makers tend to like take out either buyers and sellers in a certain area. So stop ons happen. It happens like it doesn't coincidentally, like they do it on purpose. Whenever a market stops you out and start coming into your direction, knowing that that particular zone is valid, they do it on purpose. It's not like you're not good or you're not right with your analysis. It tends to like happen on purpose. The market did a stop on here, taking out buyers and sellers at the same time. Now the market rallied all the way to like the downside. This is actually a stop on that happened. And we as SMC traders, supply and demand traders, smart money traders, this is a confirmation that whenever the market comes back to that particular area, it's going to reject. It's going to reject because it has officially turned to a sweep of liquidity. So let's see, this particular point, this particular zone is there. This particular zone is there. Sweep of liquidity, market swept this particular area, did a stop on, came all the way to the downside, causing this break of this structure here, did a stop on, and finally the market is now going back to that particular area. What do you do? This is why, but as a smart money trader, you understand what happened in the market. All you just need to do, you just need to like be able to interpret the information you trade from. This is how to take advantage of stop on, which is like sweep of liquidity. So I'm going to give the general details. I trade supply and demand. And where I trade supply and demand might be different from how you trade supply and demand. I trade supply and demand from like the smart money perspective. Everything I've said here from like support, what's it called, from like supply and demand, the illustration about supply and demand, rally based rally, drop based drop, and all of those things, and also liquidity, market coming down to like clear that particular liquidity. Then what I showed you guys here, stop on, which is like sweep of liquidity. Everything I've mentioned here is what I use in trading the market. I don't try to like make things complicated for myself. I'm very, very, when it comes to like chart analysis, I'm very, very precise what I'm doing. So all you just need to do is just need to trade according to the direction of the market. Let's say the market is going all the way to the upside. You want to look out for the present break of structure, the most recent break of structure that happened there. The most recent break of structure that happened in the market. And the most recent break of structure, it is very, very clear here. This is the most recent break of structure that happened in the market. As at this time, this is the most recent break of structure that happened in the market. So I'm going to identify this to be my BOS. This is the most recent break of structure that happened in the market. After looking out for the recent break of structure, the next thing you're going to look out for is your supply and demand. Obviously, that was what I like told you guys before we started doing all of these things. Supply and demand, since the market is going all the way to like the upside, what are we looking out for? We're looking out for the demand zone. We're looking out for the demand zone, which is like the base. I told you guys already. We're looking out for the demand zone, which is like the base. So after plotting out your base, the next thing you're looking out for is inducement. So this is it. I have four things I'm always looking out for whenever I'm making analysis. One, the trend of the market. Two, the most recent break of structure. Three, I'm looking out for my supply and demand zones. And four, I'm looking out if there's any inducement before my demand zone. Before I start looking out for other confirmation, other smart money kind of confirmation. So if we have something like this, the market started going all the way to the upside from here. This tells me that this is my inducement. This tells me that this is actually a liquidity. And if this particular liquidity is based off of candlestick wick rejection, don't worry. I'm using my entire life savings to like take this trade. I'm joking. But if this particular liquidity that has been printed here is actually a candlestick wick rejection pointing towards my zone, like I'm taking the trade regardless of how good the setup is or how terrible the setup might look. I'm taking the trade. So seeing all of these things, these are like my four key components in making analysis. So after seeing all of these things, now we want to like put other things into play. Let's put other things into play. Let's say the market now rallied all the way to like this direction. The market now dropped all the way to this side. Obviously clear the inducement, which is like the liquidity, then bounce from this particular place going all the way to the upside, which is like the most clearest of trend in the market. The market bounced from this particular point going all the way to the upside. You've gotten like a good analysis. When it comes to smart money concepts, all of those terminologies, the order block, all of these things are confluences. I would want to make you guys understand this if you don't know already. All of those things are confluences for you to take a trade very well. And what's confluence? What's it all about? Confluence is like giving you more confidence in making sure that your decisions is going to turn out positive. It's not like confidence is telling you your decision is going to turn out positive directly. Confidence is telling you that, yes, with this information with this information you've literally stated on your chart, it is very, very possible that this market might go all the way to your direction. So it is giving you more added advantage. So smart money concept doesn't just give you the forefront information on saying, okay, it is going to go like this. No. Smart money concept from all those OB, it is giving you an added advantage. This is why if you don't know how to analyze your market, the market does something like this. From a smart money perspective, you've literally understood that this particular order block or this particular demand zone is going to hold 100%, because now this particular order block has a lot of confluences attached to it. There's a sweep of liquidity here. The market swept a particular liquidity before going all the way to like the upside to break a structure. And when the market came all the way to the downside, it created an engineered liquidity. And the market started running all the way to the upside, telling support and resistance traders that when the market comes back to this particular area again, it's going to buy, but it failed to buy from this area. It came all the way to the downside, mitigated an order block here. But the fact that you literally want to implement this into the real-time chart, wanting to do things better in the chart, getting good entries for yourself, knowing where to put your stop loss, knowing how to cash those trades, you need a more profound edge. Smart money doesn't work just like that if you do not know what you are doing in the market. So whenever anybody comes and tell you that, oh, smart money, we're trading smart money concepts, if you do not know what you are doing in the market, smart money is not going to work for you. Personally, a lot of people take smart money concept to be a strategy. Me, I do not take it to be a strategy. I'm not going to lie to you guys. I take smart money to be a confluence. Obviously, we all know what confluence is. Confluence are more added confidence for you to like take your trade, knowing that your trade is going to play out. It gives you a certain level of confidence, a boost. When you have different confluences that backs up your analysis, it gives you a certain level of confidence to tell you that this particular trade is going to go to your direction. Don't be scared. Take that particular trade. You have 3 or 4 confluences that meet your criteria after making your analysis. So to me personally, smart money concept is confluence, or there are rather confluences for me to be able to like understand that my analysis will definitely go to my direction. Whenever I make analysis, I'm expecting it to go to my direction because I use the smart money concept, the little knowledge on smart money, break of this OB, fair value gap. I use them to like give myself more confidence that okay, since I'm seeing this particular thing in the market, since I'm seeing an OB here, since I'm seeing a fair value gap at my zone where I want to buy in from or sell it from, I know that okay, this fair value gap, the market is going to close on this fair value gap. The market is going to class structure. The market is going to do this change of character. When it gets to like my demand or my supply zone, the market is going to do this change of character before it starts going all the way to the upside, maybe from the like the lower time frame, like most of you guys do. So do not take smart money concept, the SMC approach on trading, to be just your strategy. Your strategy should be simply knowing how to analyze the market in real-time perspective. Once you can interpret the market in real-time perspective, then the next thing for you to do is you just use those key areas in smart money concepts to like tell yourself or give you as an extra boost to know that this particular thing is going to go where you are anticipating it to go. So don't get the raw ideology wrong. Don't get the whole thing mixed up. Smart money concept, it is not basically a strategy. Smart money concept, it's rather a strategy. It's called, let me say, confluence, more confluence. Like let's say the inner circle, what's it called? ICT, that ICT guy. Whenever he's analyzing his chart, after looking out for the trend of the market, obviously, after looking out for all of those things, it tends to like go, it trades on 1 minute time frame. It tends to like go to his 1 minute, look out for fair value gap, all of those things. Without those fair value gap, sweep of liquidity and all of those things, it doesn't take his trade. And all of those things tends to like gives him more boost to show that, okay, since I'm seeing all of those things in my chart, that means on this particular area in my chart, maybe this particular supply zone or this particular demand zone, if I'm seeing that all the way to my favor. So you could understand that smart money should be a confluence and not entirely a strategy where you just come into the market and say, I'm looking for just from anywhere. Some people do it. I see some people do it just from anywhere. They just come into the chart from anywhere because they are seeing change of character, break of structure. They do not know where the chart is going to. They do not know either the chart is going all the way to the upside or all the way to the downside. They just come into the market and see break of structure from anywhere and just mark out all of those things. It doesn't work like that. So you want to have a more profound edge in trading, knowing the structure of the market, knowing how to make good analysis. Then you start implementing the smart money concept into your trading, looking out for all of those things. After you've made your analysis, you know where the market is heading to. So you start putting all of those things into perspective for you to know. Price came down from this particular area, failed to break this particular lows, went all the way to the upside, came down, broke, and price valued all the way to the upside. This is actually an inducement, a liquidity that price is going to literally take out. This is a liquidity that price is going to literally take out. Now you mark that particular liquidity. I'll mark out my supply zone. Let's say I mark out this particular supply zone. Then obviously I would want to sell from this particular supply zone. But why I would want to sell from this particular supply zone? Some of you might say, okay, this is like the last candlestick that caused the impulsive move all the way to the downside, your order block. Most of you might pick this as let's say order block. Yes, it's very, very fine. That's your own terminology. But me personally, after seeing this particular stuff. I'm not going to pick it as my, I'm not going to say it's my order block, like the points where I want to take my trade. I want to know the most precise of entries. I'll draw my fib 2 from the top all the way to the bottom. You see what my fib 2 told me? From the top all the way to the bottom, how to know the most discounted area and the most what's the language self, discount and premium, the most premium area, like the most premium area, you know that the market is going to fall from or the market is going to rise from. I picked it to be my order block. I sell from this particular area, stop loss above the structure, a little bit above that liquidity, take profits, first take profit all the way, let first take profit all the way to the low, second take profit all the way to the side. So you guys could see how easy it was for me to like make good analysis on same time frame, get good trades. And now let's say, okay, after knowing this particular stuff is going to fall on this particular area, go all the way to this particular area and drop all the way to the downside. What are my added advantage? Let's look out for smart money concepts. Is there a sweep of liquidity? Obviously, this was a supply zone price created, price mitigated on this particular zone, came all the way to the downside. Let's say we go down to like the lower time frame. Is there an order block there? I'm not sure there is. I'm not sure there is any fair value gap. But if you could go down to like the lower time frame, which is like the 5 minutes time frame, you guys could see that from the 5 minutes time frame, there was something called breaker block. I'm just giving you guys the terminologies in terms of like smart money concept. There was something called breaker block there on the 5 minute time frame. There was a breaker there. There was a breaker block there on the 5 minute time frame. But all of those things, I just know all of these things, but I don't necessarily have to like use them to take my trade. I only use them, all of these the SMC principle, I only use them to like more advantage. Now, if I'm seeing all of these things now, if I'm getting all of this information on one particular chart, what do you expect me to do? I have more confidence now to take this particular trade. So this is why me personally, I take smart money SMC as more confirmation to take my trade, not to analyze my chart. So these are the informations I just wanted to like make you guys understand. No, like smart money isn't like a good way of approach to the market. It's going to give you a more defined edge when taking a trade. If you know all of these things, I promise you, you're going to lose in the market, obviously, but your wins are going to be more than your losses. You'll be banging a lot of trades if you know all of this. But if you do not, you should try and know them. So these are what I came here to tell you guys. Obviously, time has gone so far based off of my network and everything, but I think we should call it a day here. I don't know. Mr. J, are you there?
Yeah. I'm here.
Okay. So I think that'll be all on my part. I think that'll be all on my part for today. The time is fast spent. I'm not going to lie. I'm sorry for taking so long.
Yeah, that's very true. That's very true. All right, so so far so good. I've been following up, and I just stepped out a little bit to get something, so I just got back, and luckily I just heard Mr. J, so I just follow up immediately. Oh, okay, so so far from what we have learned about liquidity and our introduction to technical analysis, tomorrow we'll be having Blue Wave go into a more structured approach of technical analysis. That's like talking about patterns. PowerFx today gave us insights into smart money concepts, like on a general scale from different levels of things. So we talked about wide range of things from fair value gap, liquidity, smart money concepts. So basically that was the idea. I wanted you guys to have a view of what you can do with smart money. Smart money is a group of concepts. Once you find your edge, that's why most people like it, because once you find your edge, you find it flexible to use for on your technical analysis. Because on the aspect of technical analysis, if you're smart and you're somebody who likes to, do things independently, you can find that edge in smart money concept. But if you're somebody who likes to follow rules and, you like to follow structures, you might find Elliott wave, another concept even more interesting than this. because this concept actually goes into a lot of definition and a lot of confirmations before you can actually assume anything. Okay, so smart money concepts are more of concepts and theories that you then apply practical examples on. While some other concepts are calculations that you just have to know the rules and apply those concepts on. So this is like the official first introduction to smart money, and I will look into it on a general scale. Tomorrow we are going to go more deeper into looking at certain patterns based on internal and external structure, crafting out patterns and using the concept of liquidity from what we have also learned here today to go deeper into that aspect. Okay, so far, anybody have any question before we end the class for today? Anybody have any personal question, maybe from the section or along the way you might want to ask?